Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is just a real live trade example from one of my retirement accounts that I wanted to share with you, because people always wonder on the comments. They sometimes say, hey, is he only doing paper money or paper trading? And I'll get to that in a second, but I want to share with you a live trade example so you can see it with real live money and real cash. So stay tuned. I'm going to share with you this concept. All right, so in this episode, I'm doing something different. I want to show you a live trade with real money, not paper money. So here it is. This is my Thinkorswim platform from one of the retirement accounts. And just to show you, put on a live trade example, you can see it's live right over here. There's the live icon. It's green. The other one will be yellow. You can also take a look here at the top left. That's also a green tab rather than being yellow. So it is live money and real money. And the reason I wanted to do this was because, you know, people always doubt, hey, do you actually trade? Do you actually trade live money? And do these strategies even work? That's really my point and purpose. And for me, most of the time, I will show you guys things with paper money. And the reason for that is because I'm working with people to get them to the next stage. And the way that I trade might be a little different than where you're at. So as I'm looking for sharing those concepts and ideas, I might be teaching a concept on butterflies, but maybe in my live account, I'm doing an iron condor. I might be teaching a concept on butterflies, again in paper money, but maybe I have more diagonals set up in my live account. So the reason for that is because I'm trying to teach a concept at times on videos, but in the live account, market conditions might be different, or the strategy I might be deploying in a certain account might be less aggressive. Like in this retirement account, I'm looking to really capture more of the theta. I'm not looking for so much appreciation. It's kind of a strategy that I do consistently time and time again. So in this case, it's an iron condor. It is slightly bullish of an iron condor because I have, how can you tell it's bullish? Well, because I set this up with more risk here on the left side. These are the puts, so there's more risk on the left side, the downside. On the put side, it's bullish. There's less capital used on the upside. So I have less calls than I do puts that I'm selling. And when you look at this account, if you're looking at the return, you know, people are wondering, well, what return can I expect? Well, it depends on the duration. It depends on your risk levels. It depends on the account type that you're dealing with. So what returns can you expect? Well, I'll give you this one for this trade example. It's not everything that I trade. It's just one trade that's simple for you guys to understand, because I have some other more complex trades. But here in this case, let's just break it down. We're using 53.75 in capital. I'm making 300 and let's say 24. Okay, so $324, and I'm using my lowest point here is 53.75. So 53.75 is the capital used. So you're looking at making about 6% on that return. Okay, so that's how you get the capital. It's the amount of capital at risk versus what you're making on that capital. Yes, the account size in the retirement account is larger, but the capital used is that, and that's the money at risk. So that's the amount of working capital. So anyways, that's how we do it in the industry. If you're looking at it from a different way, well, what's on your total account? Well, that's a whole different story. In the industry, we look at it from capital at risk, and at risk in this trade, it's 53.75. So anyways, my point is that if you're just new, if you're struggling, if you don't think these things work, this maybe gives you an insight. If you're new, it just shows you what's possible. This trade's been going on, I think, about 7, 8, 9 days or so. So it is a little longer duration. The current expiration time frame on this is April 16th. And today's date, for those of you that are wondering, today's date is, date and time, let's go to it so we can go in and check it out. Today's date is March 19th. So I do have quite a bit of days here. Usually in the retirement account, I'll trade 30, 40 plus days in duration, which is a slower theta. In this case, it's about $16 a day on this trade. But I do have other trades on other things that are also non-directionals, like QQQs, DIA, IWM, maybe the Russell, and some other things as well. So I just wanted to share these concepts with you for those of you that are saying, hey, well, what return can you expect? It just depends. Are you more aggressive in certain account types, because on my portfolio margin account, I'll be much more aggressive. In a retirement account, I'll be much more safe. But for those of you getting started, don't shoot for a portfolio margin and be super high risk right away. Start with baby steps. And as you get there, you can, take things a little bit at a time and continue to build and grow. And that's my point for sharing this concept and video for you for a real example. Because yes, in the training videos, I'll share with you more paper money, paper trading, because I'm trying to teach a concept. As far as a live account goes, take your time. As you can see, they work. You can do these trades. Yes, you'll have some losses, but as long as, let's say in this case example, you're making 300, 300, 300 on every trade, on your $5,000 of capital, well, in that case, you just don't want to lose maybe more than $350 or $400 on a future trade. And that way, the next month, you kind of make it up time and time again. So anyways, thank you so much for joining me. Hope you got some insights out of this and gives you some more motivation to just keep going. I just want to show you a little example here to just get you thinking, to show you iron condors do work. Iron condors, you can make them work in your favor. It just depends on how you structure the trade, how you manage the trade, and really about your risk tolerance and level. Set up a few of these through different stocks, ETFs, indexes, and maybe you got 5 or 10 different trades going at the same time. So anyways, thanks for joining me. Feel free to check out some of the freebies, subscribe to the channel, and much more. Thanks again, and I will see you next time.